What's going on, everyone? I hope you're having a good day. And today I'm going to be going over my trading recap for May 1st, 2024. Today is May 2nd, 2024, but I forgot to record yesterday because I didn't have time. I'm going to be able to record both of the videos today and post them out both today. But anyways, I'm going to put up a screenshot for why my bias was what it was for today. And just pause the video real quick. Alright, so that's why my bias was that. And I'll just go over it real quick. As you can see, we are in a downtrend on the daily and on the weekly. And our seasonal tendencies are telling us we're going to be bearish. So we wait for this range to get filled up to the 50% mark like it did right there. You just saw it. I'm trying to be quick with this. And we dumped the day after, right? So this is April 30th dump, which I predicted to the dot, which is the last video that I have on my channel. That video is filled with information, so make sure to go check that out. But after that, this is the day we're talking about. This boom up and then boom down. That was because of FOMC right there, but now it's going on to a 4-hour and see what my bias was. So price is moving with a lot of momentum to the downside, and usually when price moves like this, I'm expecting some sort of liquidity to be taken, and this was the next main low that we had, liquidity, 4-hour liquidity right here. Mark it out. I was fully expecting this 4-hour liquidity to get hit, but because of FOMC, we kind of consolidated and didn't get hit. But that's okay. All right, don't worry about that. There was this order block or up close candle right here. As you can see, this is an up close candle, and it should not be violated if price wants to keep going down after this break right here, right? So then I go down to 1 hour. What is above the equilibrium of the up close candle? Because that's like a likely point to be hit in the reverse. This is a bearish fair value gap right here, and I saw this all earlier in the morning before market even opened, as you can tell by the screenshot. And everything's same, everything is correlating with ES too, but I'm not gonna. I make sure I use ES for my confluence, but I'm not gonna try to get into that right now because I have no time for this. Because it's gonna be. I don't want to make this a long video. Fair value gap right here, bearish fair value gap, and then we go up into it, and then exactly everything happened to the dot. We went up into it, and then we reversed, and I caught this dump down, and I'll tell you why. Alright, so we're on the 15-minute time frame right now, and if you're wondering what these lines are, this is basically this New York kill zone, and I'm going to mark out some analysis right here that I had on May 1st. Alright, so this is just a couple stuff marked out. This is midnight opening, and this is 8:30 opening. 8:30 we had news, and news is always manipulation, like I mentioned in my last video. So it's manipulating retail traders to go longs right here, so it can stop them out after it goes down, and then after it goes down a little bit, it can fake them out for shorts right here, like for example. They saw this as a floor. When it broke through, they're like, okay, we're going down, and their stops probably got hit over here somewhere, and they got taken out. But then on the 5-minute, all that stuff, there's 15-minute liquidity sweep that I mark out. 15-minute liquidity sweep is right here, 15-minute liquidity sweep. And we're also within the 5-hour, not 5-hour, hourly fair value gap, which is also within the 4-hour order block. So we're very, very bearish right now. So I just jump down to the 3-minute and look for a break of structure. This 8:30 high right here got swept right here. We went down a little bit. We swept this high again. And also keep in mind, this 15-minute liquidity sweep was also swept. So a bunch of stops had just gotten taken. So it's very, very likely that we're about to go down right after this move right here. And then after this move, what do we get? We get displacement right here because this was the last swing low, right, before this move down. Boom, we have displacement. I'm going to mark it out red just for fun. Displacement right here, I look for a fair value gap within here. There's no fair value gap, right? So I go down to 1 minute and find some other entry. On the 1-minute time frame, I try to look for a fair value gap, which would have been the most ideal situation, and I did not find one. So what I did instead was I looked. There's this volume imbalance right here on the 1 minute, and this is not as powerful just because it's only on the 1 minute, but it still works, right? This 1 minute volume imbalance was supposed to support price up. It did right here, but then it broke through right here, so it made an inverse volume imbalance. Inverse got hit right here, so now it's acts as resistance, as retail traders would call it. So we short right up on top of this candle. My stop is right above this high right here because that's an intermediate term high. And then my TP, I made it the 3-minute equal lows right here. You can see that relative equal lows, not exactly equal, but you can see that this low right here and this low right here are basically relatively equal, right? They're almost equal. So that was my stop loss for that reason. What the heck is that? What did I just do? I don't even know what. Okay, that was weird. Anyways, this was my take profit right here. Boom, target that, and guess what? We get hit beautifully, and this was 240 pips. So this was a very, very nice trade. It would have made about 1,000 something, 1,200 maybe. But yeah, so that was the trade I took, and I hope it helped you out. If you have any questions down below, make sure to comment. I'll answer every question. And peace out for now, and make sure you subscribe.